In this video, we're going to talk about optimizing exits for day trade strategies. I want to talk about the theory of Cobra 3. It's one of our infinity strategies. And what I mean by infinity is we let it run until the end of the day. If you look at a strategy with a profit target and a stop loss, you have a profit target and a stop loss or end of day exit. So it may not hit either the profit target or the stop loss, but it may exit at the end of the day. So if your profit target is 1,000 and your stop loss is 1,000, then you have a 1-to-1 ratio. And so when your stop loss is, say, or you could look at this the other way, the stop loss to profit target ratio, and the concept of infinity is the stop loss is 600 and the profit target is 0. Anything divided by 0 is infinity. And I mean, there is a finite number that you will trade with, and so you're not going to get an infinite amount of profit. You just don't know what that number is. You're going to let it run, and so they call these infinity strategies. You have stop loss, and you exit at the end of the day. You let it run as far as you can till the end of the day. So we are trying to catch the big winners. So we call them infinity strategies, but it's not infinity at all. It's just it can be a big number. The big winners can be a big number. So let's look at the basic Cobra 3 strategy and then show you how can you improve strategies like this. How could you improve it? The concept is that over time that markets will trend and then they'll trend into the close. And so it seems like in recent years that the markets don't trend as much into the close. They don't have long-term trends into the close. It ends up reversing, and so you give a lot back, or in this case all of it back, and then a small loss. So what can you do? You can say, well, the trends don't last as long these days, so should we try a time exit? So let's try a time exit. Let's just say that the trends only last 3 or 4 hours at most. There's no way a trend lasts more than 3 or 4 hours. You could do a time exit or you could do a stop loss exit. So in this type of market, we're not seeing many trends that trend all day, and that's what we want a couple of those every now and then. If we get a trend all day, get a couple of those, then you can have some big months on the big winners. And so let's just look at, for example, this setup right here. The current setup going back 3 years, Cobra 3 NQ, 42,000 per contract. This is with slippage and commission, $7,200 drawdown. Max loss is $625 because we're using a $600 stop loss, and we're using $25 round turn slippage and commission. Largest winner is $4,700. So here's what the equity curve looks like, a choppy equity curve, and you can tighten that with profit targets sometimes or bigger stop losses. But this is how real trading systems look, and you can improve your equity curve by typically diversity of strategies approach. And so we want, by design in our portfolios, we have strategies that hold until the end of the day or use a stop loss. We have others that have profit targets. We have others that are counter trend. And so there's diversity of entries and exits. And so keep in mind, when I first look at to see how a strategy is improved, I looked at the average trade profit and then net profit as a percentage of drawdown. So remember, 584%, average trade profit 128.25. And so the key to this concept would be to put a time exit in, bar since entry. And so I've done that. I've put in several exits, and we're going to go over each one. And the first one is the time exit. And I'm going to show you the code for that as well. It's very simple. And what we have here is I'm going to turn the status on, then I'm going to double click on it. And the short bars, we get out after 15 bars. So we're talking 15-minute bars here, so about 225 minutes, less than 4 hours for long trades. We get out after an hour. We don't stay in the trade longer than an hour for long trades. We don't stay in the trade longer than 4 hours for short trades. 225 minutes is when we get out. So let's look at, and that's from the close of the bar. So it could get in at the beginning of the bar and then it doesn't start counting till the next bar. So let's look at the code for that. So here is the code. Input, short bar is 8, long bar is 8. That's what was my original test. And then if bar since entry is greater than long bars, then sell next bar market. If bar since entry is greater than or equal to short bars, then buy to cover next bar market. And it does that. And let's look at the results of this. Remember, it's 584 return over drawdown, and then we've got 128 average trade profit. So the average trade profit goes down by $12. The return over drawdown goes up because the The max drawdown goes down to 5,000. This is over the last 3 years now. I have not tested it further than that. The total net profit is lower, but so is the drawdown. So the net profit as a percentage of drawdown actually goes up. And the equity curve looks a little bit nicer. And so you get this time exit. You're in essence saying, we're not going to hold the trade all day. There is a finite time that we hold this trade, and we don't believe that trends last all day very much anymore. That would be your theory for applying this. I'm not saying that that is correct, but it's something to consider when trading this. Also, I optimize this. So I ran the optimization tool. I don't do that much. I don't like to do that much, but I did because I just wanted to test it real quick to see. When I used 8 and 8, that didn't work. I said 2 hours, 3 hours, 4 hours. It didn't work. But 15 and 4, we optimized it and it worked. And so let's look at the difference between the long and short trades, since the holding time on long trades is significantly shorter. Your average trade profit on long trades is 94, your total net profit is 17, and your drawdown is very small. That's nice. And so on the long trades, you have more net profit, bigger average trade profit, and bigger drawdown. So that's the time exit. Get out 15 bars on short, 4 bars on long, and that's an optimized curve-fitted value going back 3 years. I'm not a big fan of that approach. I just wanted to demonstrate this concept right now, and I'll do further research before I would make any changes on this strategy. Let's look at a profit target. What if we just get out at a $2,500 profit target on short trade? So in TradeStation, the beauty of TradeStation is that you you have the opportunity to insert strategies. Profit target short exit comes with TradeStation. So if a strategy does not have a profit target, you can insert the profit target. You can insert one for the SX, which is a short exit. LX is a long exit. So you can insert strategies into TradeStation. There's a lot of different exit strategies that come with TradeStation that you could enter in here and test many different types of exits and turn off any profit targets in this setup. You could take, for example, if you already had this set to true, by default we set profit target to false. But if you had set it to true, you could turn that to false. You could also set stop loss to false if you don't want that to interfere with what you're doing. If you're going to insert a custom strategy, you could build a custom strategy the way I showed you here with exit time, or you can insert one of the profit target or other exit strategies that comes with TradeStation. So what about a $2,500 profit target just for shorts, not longs? Let's take a look and see if that changes the results. And so we get 571 versus 584, so it doesn't change it much. 125. It helped it yesterday. It helped it yesterday, but overall it does not improve it that much. And so the equity curve looks a little bit better back in here, but it's still more volatile in here, which the market is more volatile in this time frame. So we've tested a time exit. Then we tested a profit target on the short side. This is a short video just to show you some possibilities. We're not testing, this is not an exhaustive test of every possible exit strategy. You can continue to test different exit strategies. Then you have a parabolic exit. Optimize this as well. Let's look at that. I'm going to turn this off, and I'm going to click on the status bar to turn this one on. You see the status? It's on. And so I'm going to close this, and we're going to see the update here. So the way the parabolic exit works is it would exit if now the parameters for the parabolic exit, I need to change them to match the indicator. So I'm going to do that. Before I do that, I'm going to show you the results of this. So when I optimize the parabolic exit, these are the results I got. 580, so close to the other. 126 average trade profit, close to what we already had. Here's the equity curve, similar. So it doesn't help it much, but basically the indicator format analysis technique, 0.02, let's see, what is that? 0.02 and 0.2. Let me change the strategy to that. 0.02 and 0.2. So it's going to, what it's going to do is if the indicator flips, you see here it is with 0.02 and 2, 33,815, 468, 102, those aren't as good. The long side, okay, the short side, maybe use different parameter sets for the short side, but you know, it'd be better if we could convert this strategy so that it was still based on 15-minute bars, but we could somehow exit based on 1 minute resolution for parabolic, and so it had to be converted to a 1 minute strategy, which is hard to do sometimes, but and still trade like a 15-minute strategy. It can be difficult to program that. And then let's see, so when this flips from here, if you're short and it flips from +1 or -1 to +1, it flips from pink to blue, it means the trend reversed, and so we exit. So you see that exit right here. The parabolic exit is when this flips, the position on the parabolic SAR, and you could test different patterns. It'd be interesting to make this test the acceleration of that pattern towards the end of the day as it tightens up, and different things like that to see. But those are some of the things we tested, and to give you an insight on how you could test different exit ideas, even if you don't have the open code for a strategy. If you have a developer strategy such as mine, you could turn off the exits and insert your own in TradeStation. You could code up your own exits like this, and then add them as well. And there's so many different scenarios you could test. Literally, the rest of your life, you could test different exit scenarios. So you kind of have to, get the feel for what kind of works and work towards that instead of working on too many things at once. Otherwise, you could just you could spend the rest of your life testing, and you want to be efficient in this process. And so over the years, one thing that I've found that works best is in these trend strategies, depending on what you're trying to accomplish. If you're trying to catch that trend, the stop loss and end of day exit works in a lot of day trade strategies, and it can be frustrating to watch lose profits and watch those turn around. But you have to look at the big picture and consider the big winners. That you're trading for big winners when you do that, and you need big winners to make up for your losses. You can hit a bunch of singles, but you have strategies that hit a bunch of singles as well. But I find that some of the strategies that really get you ahead are the strategies that put in a stop loss and look for a big winner at the end of the day.